Hey, Bulls and Bears, today we will discuss the 2024 housing market crash. I'm not saying it's going to crash, but a lot of people are predicting a crash this year in the housing market. We're going to break that down and a lot more. First, let's talk about the insane, unprecedented flooding that is happening actually right now as we speak here in California. I'm fine. So, to those of you that were asking, thank you for asking, but I'm actually fine. And let me just bring up a video here real quick. And this is the freeway. This is very unusual to see freeways going through this type of flooding. A lot of people's cars, houses. Um, it's a real crazy situation. And I know people that have businesses here that had their businesses wiped out. Basically, I'm praying these people had flood insurance. We're going to give you a sad statistic regarding flood insurance here in just a minute. Actually, let me let this play while I bring up this other article here. But it was never seen before, right? And we've talked about this here from time to time, how the weather is getting stranger and more chaotic, more severe, more devastating. And we tied that in with how it's going to cause insurance prices to explode higher. And we've been right. I mean, if you look at inflation over the past 3 years, it's a lot of things are inflating. Cost of living is really going up, but insurance is one of the big ones. I mean, people have seen their rates double, triple. And guess what? Even if you don't have flood on your residence, if you live in California or any state for that matter, where you see devastating floods like this, you're going to be chipping in for the cost of these claims. Otherwise, the insurance companies won't be able to stay in business because they can't just charge the people that had claims to recoup all of the losses. They're going to charge them more for having a claim, but they'll never be able to recoup all the losses just by charging the people that had the claims because there's just not enough people to pay for such high costs, right? So they're going to split this up across their entire customer base. And even if you've never had a claim in your life for home insurance, you're going to see rates continue to go higher. And take a look here. Here's the kind of sad statistic that I wanted to bring up here. In California, only about 230,000 households have flood insurance that's typically separate from your regular home insurance. You have to buy flood separately, and earthquake also. Typically, you have to buy those as separate coverages because not every location needs to worry about flood and earthquake, so they leave those out or leave those optional. But what do we see? That only equals about 2% of properties in California that are covered against flood insurance. So all these devastating floods, there's a lot of people that may not make it through this. Not many people, of course, we talk about this quite a lot here, how few or how little savings people actually have. For the most part, about 65 to 70% of people living paycheck to paycheck. How many people have enough money left over to uh, fix all this flood damage, and have enough savings to pay for that? Not many. And when you look at just 2% of people have flood insurance, this is going to be a very devastating thing to a lot of people in California and in a lot of the country. We saw flooding too on the East Coast. And these were unprecedented floods for San Diego. Very, very unusual here. Now, let's get into this prediction of a 2024 housing market crash. This is out of Narada Real Estate Investments. 44% of Americans think the housing market will crash in 2024. And as many of you know, I am not one to predict a housing market crash, especially in an election year. Do you really think they're going to let the housing market crash, right? So I have to disagree with the 44% of people that think the housing market will crash this year. I think they will do everything they'll do, create as much currency as possible, um, put a moratorium on foreclosures and evictions both if something really big and devastating happens to the economy. Just like in 2020, they didn't let the housing market crash then, even though we saw unprecedented job losses. And they did so much money creation and threw so much liquidity at the problem. Really, that was a very short and shallow recession that we saw back then. And I think it's going to be more rescue programs and more of the same now, unless somebody really drops the ball on it. But let's get back into this article here a little bit, because it's interesting that this many people would predict a not just a correction, a housing market crash. This is out of Lending Tree. This was a survey. Recent findings of over 2,000 consumers paint a grim picture of the housing market. The future of 44% of Americans' housing market is at risk of crashing in the next year. What's even more surprising is that 35% of Americans actually hope for a housing market crash. Now, we've talked about that statistic before. That goes in line with about pretty close to the number of people that are renting, right? It's about 64% home ownership right now. 64% home ownership rate. That leaves about 36% that actually rent. And when you look at the number, 35% of Americans actually hope for the housing market to crash. So all the renters, they want the housing market to crash. But the problem is, if it does crash, even if it did, which I doubt, even if it did though, and you're looking to buy a home, you're going to be competing with investors and mega corporations coming in with billions of dollars to try to buy up as much property as possible on the next crash, if there is a crash. Let's see here. Nearly a third of non-homeowners, renters, see a market crash as their only pathway to home ownership. So a lot of people see this as the only hope or option of ever owning a home. It's pretty sad. A sentiment particularly pronounced among Gen Zers, which 39% of them, and millennials, 38% of them, see the housing market crash, or see a housing market crash as their only hope to buy a home. I think that's pretty sad here. Home ownership challenges persist, with 50% of homeowners feeling stuck due to their current low mortgage rates. Yeah, people don't want to sell and get rid of their low mortgage rate and go out and get another loan at double the mortgage rate. And they don't want to rent because rents are way too high as well. So in order for home prices to come down, you may have to see rents come down. That way, the homeowners that are deciding not to sell, they'll have a cheaper alternative, which would be to rent if they ever sold their home. So it's very kind of a rock and a hard place right now for homeowners. You can't sell and rent for a much lower price because rents are way overheated. Let's go ahead and move on here. So also what I think is going to happen this year in just a couple months. I think we're just a couple of months away from rate cuts. I see these rate cuts beginning in March or April of this year. Remember, March is supposed to be the month where the rescue bailout package that's being pumped into the banks right now, that's supposed to end in March. It was supposed to be a one-year program, and it began last March, March 2023, after a string of bank failures here in the U.S. So will they let that expire? Well, if they do, they're going to need to really cut rates very quickly. But see, I don't think they're going to let that expire. But we're already talking about rate cuts. Look at Powell and the money creators. You know, they're already talking about rate cuts. And look at what's happening with the Bank of England. Bank of England already talking about it, set to start on path towards interest rate cuts. You notice how these banks, the central banks, they work basically in concert with each other. They raise the rates at the same time, they cut the rates at the same time. So it is a global economy. We are seeing global inflation. So it happens here, happens around the globe. And of course, we're going to see other banks follow suit as soon as the Bank of England starts cutting rates. And I'm surprised there's so many people out there that thought there would never be rate cuts. They really believed that the Fed was dedicated to fighting inflation. They actually believed what the Fed said. Of course, the Fed did say that. They said rates are going to be higher for longer. We're dedicated to fighting inflation. And now they're acting like, even though inflation really hasn't come down, it's slowed down, but the cost of living overall hasn't come down. They're acting like they won the war on inflation. That way they can justify cutting rates when things start falling apart here, I think, in just a couple more months. But again, I don't think there will be a crash. In order for there to be a housing market crash, there would need to be a freeze up in the debt markets. And credit would have to be cut off, just like we saw at the beginning of the housing bubble bust in 2008. We saw credit get almost completely shut off. It was very difficult for several months to get any sort of mortgage. Cash buyers, they could still come in, of course, and investors came in and still bought homes. But as far as getting a loan, it was very difficult. Will they let that happen this time? will something so big and so outrageous happen, so unexpected happen this year that it will have this sort of major impact on lending? I mean, please let me know what you think down in the comments. There's the risk of war coming to the U.S., coming to the U.S. shores and on U.S. soil. A lot of different things are being discussed as far as people out there warning about the grid being attacked, outages, power outages, and system-wide failures. Of course, any of those things can happen, but you have to kind of weigh the odds of those things happening and place your bets when it comes to investing. Some interesting news, though. Let's talk about a couple investments and layoffs. First of all, Netflix. Netflix, big news, added 13.1 million subscribers in the fourth quarter of 2023, and that tops revenue estimates. And the stock surged. Last time I checked, it was up about 8%. So a nice little jump in that stock. And, that was one of those things where we were wondering if people were going to go ahead and continue to pay for Netflix, right? Because a lot of people were cutting back on things they didn't have to have or discretionary spending. And the speculation was also, many people predicted or speculated rather, that people were going to cut the cable and just go to streaming apps, right? So instead of paying 100 something dollars for cable every month, just maybe have 2 or 3 streaming apps, which might add up to $30 or $40 versus the cable bill, which is still a very cheap alternative. But let's take a look at Netflix here. 13 million subscribers added. Analysts were only forecasting about 8.7 million. So that's a very big beat for Netflix. And let's take a look at their stock here. This is pretty amazing. Let's go ahead and bring up maximum chart here. This is a stock that if you go back to 2016 was trading at just over $100. So you could have 5 times your money. And also recently here, back in the summer of 2022, would have been a pretty nice dip buy at $182. So I missed out on that one. I've made some pretty good trade calls here on this channel, and I know some of you have followed me on some of these trades. That one I missed out on. Didn't expect it to surge back up like it did, but I can kind of see it because if you're just going for Netflix and a couple other streaming apps instead of paying for cable, it's a good way to save some money. Some people would say don't have any streaming apps or that sort of entertainment because you can pretty much do anything online or watch anything online. Well, not always. I mean, there's certain shows you can only watch through these streaming apps. All right, but let's shift gears a little bit here and let's talk about this. This is investor Mark Cuban from Shark Tank. One of his companies had to file bankruptcy, Chapter 7 bankruptcy. The way it is with businesses, though, you could file bankruptcy in one business and have your other businesses, as long as they're under a separate LLC or a separate ownership, they could be just fine. So it's pretty interesting the way that works is you can file bankruptcy, but yet personally you don't lose any money. And you could have other businesses. I'm sure Cuban owns several businesses that really would not be affected by the one company that went bankrupt. Now, I want to bring this next story to your attention if you haven't heard about it. This is a sign of the times. A online car dealer, retailer called Vroom, bites the dust. After 3.5 years, it shut down. And this is amid Ally Bank suspending their line of credit. So what was happening with these loans to have Ally so concerned and abruptly shut down their line of credit? Wolf Street did a recent write-up on this here. So pretty interesting. There was speculation for a while that Carvana wasn't doing good. Carvana ended up staying afloat, and actually the stock really saw a big rebound. Back in 2020, on the first day of trading, the IPO, initial public offering for Vroom, spiked 117% from $22, which was the initial price, to $47.90, and went up as high as $73 a share by September of that year of 2020. Right now, the stock is trading at 31 cents. Wow. So some people got burned big time from $73, which is the high in September 2020, down to 31 cents. Let me just bring up a chart so you can get a visual on this one here. Pretty amazing. Pretty sad for anyone that was in that stock. And then Carvana kind of did the opposite. Carvana spiked, had a big drop off of about 90%, but then went back up. It hit under $4 or under $5 a share. So it's a stock picker's market. I mean, if you're good at picking buying opportunities, you can still make money in these markets. We'll continue to try to keep you on top of the investments here. I'll try to get more investments that we know ahead of time, not just looking back, but forward-looking investments here to find us more ways to make money. I've had some pretty good ones. For those of you that have been on this channel, you do know that. So we're going to wrap it up for today. What do you think about the 44% of people surveyed that not just wish, but actually think that there will be a housing market crash here in 2024? Is it just wishful thinking for people that are stuck renting and want to buy a home? What do you think down below? Do you see any chance of that happening in 2024? You know, my thoughts. Like to see yours down in comments, everybody. Thanks for watching. Keep stacking, everybody. Bye for now. Peace.